Welcome to another episode of Frugal Finance. I just thought I'd give you a quick update on my trading 212 portfolio. So I recently started this, at the start of this week actually, because I was doing some market research and I concluded that probably trading 212 for now was the best platform for me to use. One of the key factors was that the ISA allowance, the ongoing charge, for having an ISA is actually zero, so it's free to hold an ISA with them, whereas companies like Freetrade charge you an ongoing of £3. So obviously at this early stage that's quite significant because it will lead into the returns. So yeah, I felt that was the best option to go for, but obviously it's down to your own opinion and as to how you might feel the platforms work. I would say trading 212 is a bit more complicated and gives a lot more information, whether you can interpret that or not, is another thing. So Freetrade is probably easier to use in my opinion, and also easier to buy shares. I'm not keen on the way that you can credit your account with the money. Here it's very simple. You press credit, it takes it from your Apple Pay or card, whatever, straight into the app, done. With Freetrade you have to send the money to them and then they have to credit it to your account, so it takes a little bit longer to do. So as you'll see, I've got some orders that I've put in. I've put a total of £175 into the portfolio, which you can see I've got free funds, £13, and then blocked pending orders, because they're USA orders that I've done. The market isn't open until 2 o'clock today. So, and as you can see at the moment, the current return is minus 28p, which is kind of to be expected to start with. You should never go in thinking you're going to make money straight away. In fact, you should really think you're probably losing them to start with. These are, generally speaking, buy and hold type strategies. So I'll give you a quick breakdown of the portfolio. So I've got AGNC Investments. They're a real estate or property investment company in America. They actually pay a very small dividend on a monthly basis. So I'm hoping that whilst the share price might go up slightly, that small dividend will also see top up any benefits there. I've also went for a small section of Apple. What I plan to do is any loose money that I've got, so after you've made all your investments, you obviously it doesn't quite always add up. So you end up with sort of £11, as you saw, but there's cash. So what I plan to do is then stick that into Apple as a kind of safe haven, if you like. Pays a very small dividend and grows steadily. They've also got some new products coming up. And you can have a look at all their things like their PE ratio and so on down here, and obviously things like dividend yield and so on, and various other bits of information on them. So that I won't go into it too much, as we all know Apple's a relatively safe company. And then I've got Barratt Developments. They're a UK developer, and they build new houses essentially. I'm hoping that over the long period that will go up. I know there's some incentives coming out for first-time buyers, which are aimed solely at new build properties. So I'm hoping that over the long term that will continue to go back up. You can see their all-time high back here is £8.70, currently trading at £6.51. So hopefully that will return to that. And then that's pretty much the same story with Taylor Wimpey. They're in the same industry, and you can see the graph is relatively speaking the same here. So again, £2.31 currently at £1.67. I believe they normally pay a small dividend, although that is currently suspended. Then you've got Cineworld Group, which obviously this is a bit of a punt really. The share price was £6.28, currently 64p. In the main, that's because they're completely closed. So that's obviously hit a rock bottom low. Now, obviously with any of this, there is a chance that this company could go into administration or go bust, and I end of that. The likelihood is, I feel like as a business owner myself, that they've made a conscious decision just to close. Obviously, they're claiming all the various benefits that the government are handing out at the moment, the furlough scheme and the business rates reductions and so on. So I feel like they're doing everything they need to do. They haven't just chucked in the towel. I think they've just made a conscious effort. So personally, I feel that was an underlying factor, and I do believe it may not return back to the mega highs of £6, £7 a share from 64p, but I do believe it will probably return to £3 or £4 as soon as they open. So I plan to actually put a little bit more money into here, but we shall see. Hopefully that they do open again, and that reap the rewards for that. And then EasyJet, as you all probably know, obviously they do cheap UK airline flights across Europe and so on. And again, their kind of year to date is not looking too pretty, but that is mainly because of the pandemic and the fact that they're pretty much operating at half or less of their capacity. You can see it was trading at £15 a share and currently only £8 a share. So for a couple of shares in that. And then Wells Fargo, which is American Investment Bank, again, you can see that has dipped massively low from its highs of just shy of $50, down to 29. So I just bought one share in that on the basis that may turn to profitability. So the long-term forecast you can see there, I suspect it may return back to this kind of 50 level and then plateau at that, or maybe go up to 40 or something. So it may be a case of that one isn't a long-term buy and hold strategy. But as you can see, they're all relatively low sums of money invested into these companies and spread across a diverse portfolio of different sectors, if you like. So I probably will add a few to this, but my strategy really is to try and pick out a mixture of dividend-paying ones and growth stocks, and then really maybe try and capitalise on the ones that, like Wells Fargo and Citigroup Group, that will hopefully return back to their previous levels or somewhat near them, and then I can make a decision on the strategy from there. So yeah, that's my portfolio. So if you could like and subscribe, or comment below, share the channel, trying to hopefully get up to the sort of monetization levels in the next 12 months for YouTube. And the plan then is to really try and show you guys how this portfolio or various other ones can have funds invested. So to invest some of those funds into there. So if you've got any questions at all on the portfolio or why I feel like these are particularly good bets at the moment, then please do comment below. Try and get the video out there and manipulate the YouTube algorithms, so to speak, by liking and sharing and subscribing. I'll probably give you an update in a week or so on this one. Cheers for now.